Hi everybody, welcome to Christensen Wealth Management. I'm Michael Christensen. Thanks for taking time out of your day to watch the stock market update and industry sector review for the week ending Friday, April 13th, 2018. Before I get into the charts, I would like to begin with the quote of the week. This week's quote is from Will Rogers. Will Rogers was born 1879, died 1935. He was a stage and motion picture actor, vaudeville performer, American cowboy, humorist, newspaper columnist, and social commentator from Oklahoma. He is known as Oklahoma's favorite son. Will Rogers once said, "Don't gamble. Buy some good stock. Hold it till it goes up, then sell it. If it doesn't go up, don't buy it." Those are some wise investing words from Will Rogers. Well, we had pretty much a sideways week, lots of volatility, but we had a few down days followed by a few up days. And as of the recording of this video, which is Thursday, the 12th of April after the close, the stock market has gone mostly sideways for the last 5 trading days. But Friday morning, before the open, many of the banks release their earnings reports, and it is the beginning of earnings season for the next several days to weeks, so that will also generate some more volatility. Based on what it looks like, the stock market is very, very much out of strength or out of gas. So I'm thinking that maybe Friday will be a down day, but I'll just have to wait and see. Let's go ahead and take a look at the charts, beginning with the Dow Jones Industrial Average. Before I begin, I would like to say that the charts you're about to see are 6-month charts from October 12th, 2017 to April 12th, 2018. Looking at the Dow Jones Industrial Average, you can see that the 5-day moving average in red is still below the blue 20-day moving average, indicating short-term weakness, but the 5-day moving average and the 20-day moving average are now moving in parallel to each other, indicating just a slight bit of indecision over the last couple days. And the blue 20-day moving average is below the purple 50-day moving average, indicating intermediate term weakness as well. Now, one thing I would like to show you is if you change this chart from a line chart to a candlestick chart, which each red and green increment is a day and represents the high, low, open, and closing prices of the Dow Jones for the day, you can connect these highs perfectly. And that just means that we are in a pretty solid and established downtrend. And I'll elaborate on that here a little bit. So the high of January 29th lines up perfectly with the high of February 27th and the high of March 12th. And as of Thursday, April 12th, it lines up perfectly with the high of that. We went up on the 12th, touched it, and backed off again. So that makes 4 touches to this declining tops resistance line, and the strength of the Dow Jones, measured by the quantity of shares traded for the day, is falling significantly. So there is very little strength in the Dow Jones Industrial Average. So it will be very interesting to see whether or not the Dow Jones is rejected over the next week and turns lower, or finds a little bit of strength and breaks above that red line. So we'll just have to wait and see. But right now, the declining trend line is intact. So please use caution with the Dow Jones Industrial Average. Here is the chart of the S&P 500 stock market index, and you can see that the 5-day moving average in red is still below the blue 20-day moving average, indicating short-term weakness, and the blue 20-day moving average is below the purple 50-day moving average, indicating intermediate term weakness as well. Just as with the Dow Jones, we can change this over to a candlestick chart and connect the highs going back to these here, and you can see, there we go. So the S&P 500 is slightly different. This one comes from the high of January 26th, touches the high of February 27th. We had a false breakout here from March 9th, and it went back under on March 19th. So we had a short little false breakout. And as of April 12th, we closed, essentially, let me adjust that line a little bit. We closed just slightly below that declining tops resistance line. So the 13th of April and the week ahead will tell us a lot about the S&P 500, whether or not it can break above that declining tops line, because just like the Dow, the strength has fallen in this particular index dramatically over the last week. So we have a very weak S&P 500 that's trying to test a very strong resistance line that's trending lower. So we'll just have to wait and see, but use caution with the S&P 500 at this time. Here is the chart of the NASDAQ 100 stock index, and we have the 5-day moving average in red is below the blue 20-day moving average still, indicating short-term weakness, and the blue 20-day moving average is still below the purple 50-day moving average, indicating intermediate-term weakness as well. This chart is very different than the Dow and the S&P. It is heavily weighted toward technology stocks, so it doesn't look very much the same. Right now, we just need to keep an eye on these moving averages, and as of right now, we really just have short and intermediate term weakness, and we need to use caution with the NASDAQ 100 at this time. Here's the chart of the S&P 500 Information Technology Index, and as I previously said, it looks very much similar to the NASDAQ 100. We have the 5-day moving average in red is still below the 20-day moving average in blue, indicating short-term weakness, and the blue 20-day moving average is below the purple 50-day moving average, indicating intermediate-term weakness as well. So currently we have a lot of weakness, and we really need to just keep using caution with the Information Technology Index. Here's the chart of the S&P 500 Consumer Staples Stock Index, and we still have a lot of short-term indecision here because the 5-day moving average in red did pop above the 20-day moving average, but immediately turned back down again, and they're really moving in parallel. So we have a lot of weakness in the short term and a lot of indecision in the short term with consumer staples because we had a breakthrough, but then an immediate breakdown in price. So staples are still looking pretty weak, and the 20-day moving average in blue is still below the purple 50-day moving average, so we have intermediate term weakness as well. So just use caution when it comes to consumer staples at this time. Here is the S&P 500 Industrials Stock Index, and the 5-day moving average in red is below the blue 20-day moving average, indicating short-term weakness, and the blue 20-day moving average is below the purple 50-day moving average, indicating intermediate-term weakness as well. So there really isn't much going in the favor of the industrial index at this time, so please use caution until we have some sign of life. Right now it is still in a pretty solid downtrend. Here is the S&P 500 Utilities Stock Index, and we currently have the 5-day moving average just slightly above the 20-day moving average, indicating some but very little short-term strength. Mostly it's transitioning toward weakness in the short term, but the blue 20-day moving average is still above the purple 50-day moving average, indicating intermediate term strength. So there is still something going for utilities. We'll just have to wait and see where we go on the 13th of April and the week ahead. If the 13th of April this index breaks down further, then we will have a short-term weakness confirmation and some caution will be needed. But right now we have short-term caution, intermediate-term strength, so we'll just have to keep an eye on it. Here is the S&P 500 Consumer Discretionary Stock Index, also sometimes referred to as the cyclicals. And we have a 5-day moving average in red below the blue 20-day moving average, indicating short-term weakness. And we also have another problem, and that is that the 5-day moving average has turned down and is now moving away from the 20-day moving average. So we may have a breakdown in the discretionary index here in the next few days. And along the same lines, the blue 20-day moving average is pulling away from the purple 50-day moving average. So we do have a confirmed intermediate term weakness indicator as well. So use caution when it comes to discretionary or cyclical stocks at this time. Here's the Dow Jones Financials Stock Index, and we have the 5-day moving average in red below the blue 20-day moving average, indicating short-term weakness, and the 5-day moving average is not heading toward the 20-day, so we have a situation where there's some indecision right now, or rather a pause. Some caution is needed in the short term. And we have the blue 20-day moving average is pulling away from the purple 50-day moving average toward the downside. So we have intermediate term weakness that's getting weaker. So financials are not looking very attractive at the moment. So recommend using some caution with the financials sector at this time. Here is the Dow Jones Oil and Gas Stock Index, and we had a short-term pop of strength here that rallied from April 9th up to April 11th and then took a pause. Right now, the strength of the oil and gas index is falling off and just kind of turning into weakness at the moment. So use a little bit of caution here right now. But to be fair, the 5-day moving average in red is above the blue 20-day moving average, indicating short-term strength that, yes, is getting stronger because those two lines are pulling apart from each other. And the 20-day moving average is still below the purple 50-day moving average, indicating a little bit of remaining intermediate term weakness. But that blue line, the 20-day moving average, is trying to cross above the 50-day moving average, which, if that happens, would indicate intermediate term strength as well. So we may be seeing a breakout here a little bit, another day or two. We shall have a better sense of that. But right now, use some caution, and we'll just see what the next few days brings for the oil and gas or the energy index. Here's the Dow Jones Healthcare Stock Index, and we currently have the 5-day moving average in red below the blue 20-day moving average, indicating short-term weakness, and the blue 20-day moving average is below the purple 50-day moving average, indicating intermediate term weakness as well. We are still in a downtrend here. If I quickly connect some of these tops here, you can see that connecting all these tops, we're still below that declining tops resistance line. So right now, use caution with the healthcare industry and the index, because it's still a pretty solid confirmed downtrend with short and intermediate term weakness. Here's the final chart of the day, the Dow Jones Real Estate Stock Index, and right now the 5-day moving average in red, the 20-day moving average in blue, and the purple 50-day moving average are all laced in with each other, and we really can't get a good sense of whether or not this is going higher or lower, because right now we have short-term weakness and intermediate-term strength, but yet the price of this index in black is below all three moving averages, indicating increasing amounts or more and more weakness is the best way to describe that. So we just need to remain cautious with real estate until we have a sense of whether or not this is going to go higher or lower. Right now, it is just going sideways, and we are really, as of the 12th of April, sitting right where we were on February 6th. So lots of sideways movement and volatility. No real established trend toward the upside or the downside. Thanks again for watching this stock market update. I hope you found the charts and information useful. Before you go, please take a moment to click the subscribe button on this YouTube channel and then click the little bell next to it so you will be notified whenever additional videos are posted. And then in the summary description of this video, you will find links to the Facebook, LinkedIn, and Twitter site for Christensen Wealth Management, and I invite you to go there and like or follow those pages so throughout the week I can communicate with you on social media. Well, I look forward to talking to you again in a week. Enjoy your day, and I'll talk to you soon. Bye-bye.